Good morning, Facebook. Jerry Hattershite here, 1 Minute Mortgage Pro. Quick video, excuse me, on community property states and what does that mean to you. Real quick, the list of community property states: Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. If you live in any of those states, this video applies to you. So when it comes to factoring in debt to income ratio, I myself am married. My wife's name is Joni. And if I were to buy a house here in Kansas, uh, Kansas being not a community property state, I could be the only person on the loan, and I don't have to factor in any of her debts, any of her, if she has student loans, if she has a different mortgage, auto loan, credit cards, if she has child support, anything like that that would normally be factored into a debt to income ratio, which, by the way, really helps to decide what you're eligible for as far as a mortgage size. Any of those things that she has on her credit, I do not have to take into account when I'm the one buying the home by myself. I could then add her to the deed later if I'd like, if she wants to have rights to the house. But in, say, again, Texas, for example, or California, Arizona, some of these other states, if Joni and I had lived there and I was going to buy a home, I would actually have to take all of her debts into consideration. So not only would they pull my credit, but they would pull hers as well. And so they would have to, sorry, I'm like really close to the camera. They would take hers into consideration as well. So I would actually have to factor in all of my debts and my proposed mortgage and all of her debts as well. Again, the car payments, the credit cards, anything that she's got on her credit. So my income, if I'm the only one on the loan, has to be able to handle my debts, the proposed mortgage, and all of her debts. And then they look at the debt to income ratio with all of those things considered, and that decides what it is, the amount that I'm actually eligible for. There's other factors that help decide that, but that's one of the major playing roles there. So again, in those states that I mentioned, Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin, those are community property states. Keep in mind, if you're married, we have to factor in your spouse's debts as well. Hope you guys have a great day. Ask questions, get them answered. See ya.